Investing in real estate has always been a dream for many. But with skyrocketing property prices, it often feels out of reach. But did you know there is a way of achieving this dream without having to put up a huge amount of money? Hi there, I'm Nandita Khemka and you're watching Realty Returns powered by 99acres.com. Today, we'll do a deep dive into the world of fractional ownership, where you can co-own high-value real estate without breaking the bank. But is it a game changer or just another investment trend? How do the returns compare to traditional real estate? And most importantly, how easy is it to exit? Well, we break down the facts, risks and rewards so you can decide if it's worth your money. But first, here's a lowdown on the basics of fractional real estate investing and where things stand today. Fractional ownership has been around for nearly a decade. Yet, it is an asset class that generates curiosity and apprehension in equal measure. What is it? How do the returns compare? Are platform managers trustworthy? And can investors exit smoothly? Simply put, fractional ownership allows investors to co-own and earn income from real estate without needing to buy an entire property. Ownership is divided into shares with a minimum investment, spanning asset classes like offices, retail warehouses, student housing, or vacation homes. The platform owner manages the property, ensuring upkeep and rental collection, while investors receive payouts at pre-agreed intervals. Between FY22 and FY24, yields from fractional ownership platforms ranged from 7 to 9%, outpacing real estate investment trusts, which offered 6.5 to 7.5% in the same period. Regulatory clarity has improved with the SEBI classifying fractional ownership platforms as alternative investment funds, while the Real Estate Regulatory Act mandates registration and transparency in timelines and financials. Now, proponents say that fractional ownership lowers entry barriers to real estate investments and removes management hassles. However, concerns remain over unscrupulous players selling non-income generating bogus assets that could potentially cause a lot of distress and losses. Concerns also remain as to whether the platforms have enough liquidity for investors to smoothly exit if they wish to. New age platforms like Property Share, Strata, and HBits have increased transparency, but experts emphasize investor due diligence, checking the platform's track record, property details, micro-market trends, rental income projections, and exit options. These platforms are also exploring small and medium REITs, where investment opportunities are publicly listed as separate schemes. In 2024, Property Share launched PropShare Platina, a 353 crore rupee fully leased office investment in Bengaluru. CBRE estimates a $60 billion market potential for SM REITs, with up to 350 million square feet of office space fitting this model. SM REITs prohibit under-construction properties and ensure mandatory quarterly cash flow distributions, adding another layer of security for investors. Well, now that you're familiar with fractional real estate investments, let's dive deeper into how you can get started on your investment journey. Joining us today are Desai, Senior Executive Director at Knight Frank India, and Kunal Moktan, co-founder of Alt and Property Share, to guide us through the process. Gentlemen, thanks a lot for taking out time and joining in on this episode of Realty Returns. Viral, let me come to you first. You know, fractional ownership has been around for nearly a decade, yet many investors are still unfamiliar with it. So my question is, how can one really get started with real estate investments through the fractional ownership route and the platforms as well, and what key factors should be on investors' checklist for this?
Sure. Let me first begin to say that as an asset class, commercial real estate perhaps today, and this is across asset classes beyond real estate as well, is the cheapest form of an investment that one can make. Given the value, if you were to compare residential real estate, commercial real estate comes at a 30-40% discount anywhere in the country. We are in a very matured state of commercial real estate, and India is perhaps the best performing commercial real estate market. The only challenge that retail investors used to face is that the size and value, or by the volume and the value, was perhaps out of reach. What fractional ownership and now the SMA REIT has done is that it has put a regulatory framework and it's been made possible for retail investors to participate. And it's I would say that we are at an early stage of that change and transformation. But simple steps that one can undertake is that there are a few players in the fractional ownership market, and Kunal's firm is the first business which has got listed on the SME REIT, where you can buy commercial real estate as you would buy stocks on the traded platform with a minimum investment of 10 lakhs. And as far as fractional ownership goes, there are a few firms which are in this trade where you can buy a bouquet of properties, where they are investing, and as low as 10 lakhs to 20 lakhs, 25 lakhs as well, and participate in this commercial real estate boom that is India is witnessing, and it's extremely safe. It should fetch you anywhere between 7 to 8.5% yields, and it's fairly regulated. It's safe, and I think uh, all these platforms are now quite tech savvy, and they have great reach through the online channel. So you can look at the assets, you can gauge where you want to participate and what you want to do, and making commercial real estate value driven and smaller in size and accessible to retail investors.
Sure. We'll talk about the regulations and other things in just a bit. But coming to you, Kunal, investing in real estate properties requires huge financial resources, and not everyone can really do that, right? Because so fractional ownership allows one with limited resources to invest in real estate assets. The minimum investment required, I think Viral mentioned 10 lakh, and what is the maximum? Could you throw some light on that?
There is no maximum investment that a person can make, but the maximum property that can be bought is worth 500 crores. Above that, it goes to the REIT framework.
Sure. Viral, coming back to you, we of course know that Kunal's platform was the first one to be listed on the SME REIT platform. But according to your research, which are the top 4 to 5 players dealing in fractional real estate, which have a great track record?
So, the track record is still evolving. And of course, Kunal was the early entrance in this business and very successful. And there's of course, Strata, there's EdgeBiz, there's Myre Capital. There are a few which are there at play as we speak. And each are in their own journey. But I would say that, as a bouquet of the spread of what is happening, I think this is pretty solid, and is penetrating the market now.
Okay, Kunal, in terms of passive rental income, how good is fractional real estate vis-a-vis traditional property investment? Are the prospects better? What is the return potential? Take us through your your thoughts.
Before I do that, what I would say is that fractional real estate, the term itself, is now not allowed. There is no such thing as fractional real estate anymore. Property shares started fractional real estate in 2015. We pioneered that asset class, and then the others, like the ones that Viral just mentioned, sort of followed later. But since March 2024, SEBI actually does not allow fractional real estate anymore. They gave everybody 6 months to sign up to the new regulations, which is called small and medium REIT. So that's the new product. No longer fractional real estate. After September 6th, fractional real estate is on practically not allowed. To answer your question on returns, like I think we'll briefly touch upon. There are 2 forms of returns. One is the rental that you receive from the commercial office space, which typically averages 8 to 9%. Our first listing, PropShare Platina, which was a tech park on Outer Ring Road in Bangalore, which incidentally also Viral was the broker on that deal. That was at 9% yield, and that paid out its first distribution last month. So that's the first part of the return. And the second part of the return is capital appreciation of the underlying property, which typically has been between 5 and 8% per year over the last 15, 20 years in this asset class. So together, I would say anywhere between 14 to 17% unleveraged returns is what investors can look to make in this product.
All right, promise of good returns. Then, Viral, when an individual invests in a mutual fund scheme, one checks the risk parameters of the scheme, investors' own risk profile, fund managers' performance, and so on and so forth. In the same way, what should an individual really check while investing money through this route? What are the checks and balances one should do before making investment via this route?
So just like the mutual fund schemes, with all of the, now under the SEBI's, guidelines, a lot of has been taken care of from an investor standpoint. But to highlight, I think platform credibility, which would be how many assets were bought over the period of time and what is the sort of return and what is the exit that the platform was able to give. Which is the asset that is under the REIT. It could be a combination of assets or it could be one single asset. Like in this case, that Kunal listed, the first REIT was one single asset. It was almost a sale and lease back of the property, and it was one single building in which the whole asset, the investment was made. The ownership structure, the SPV structure, and more importantly, what is going to be the exit mechanism are some of the risk assessment things that one should carry on. I would generally say that, Kunal mentioned about the return, which is the monthly return, that you are, the yield that you are making, but also the capital appreciation, which is likely to come in commercial real estate simply because, as I started to mention at the beginning of the call, what has happened in the past has been very humble at 5%, but fundamentally across asset classes, commercial real estate comes at a very, very, very deep discount, and hence it is a fantastic investment. And this asset class will see appreciation much higher, much for longer. Also, the delta between residential and commercial real estate is the highest in India, which does not exist. The premium that one pays for residential real estate is the highest in India. So the rental yields, for example, on residential real estate are 2 or 3%, but in the case of commercial real estate, it could be 7.5 to up to 9%. So that by itself, the pedigree of the tenant, the pedigree of the development, there are only few developers who make commercial real estate today, handful of them. So the quality of the asset is far superior. The quality of ownership is superior. The quality of maintenance is superior, and the returns are superior, and it comes at a deep discount.
Kunal, tell me, what is the frequency of returns here? Is it monthly, quarterly, or at the time of exit? And can one really invest for the very short term?
These answer your question, the second question first. The REITs are listed, so you can actually invest for a day if you want to, and you could exit on listing or the following day. It's fairly liquid, so you could exit whenever you want. And in terms of frequency of distribution, it's quarterly. So while the rents are paid by the tenant monthly, the REITs distribute the dividend or distributions every quarter. And as far as the return of capital is concerned, in about between, I think, 3 and 5 years is when typically a platform like ours would sell the asset and return all the capital, wind up the scheme, return the capital to investors if they prefer to wait and not sell on the stock exchange.
But there are a lot of concerns around liquidity when it comes to ownership from this route, right? Are these concerns unjustified then, Kunal?
They are justified to a certain extent. Now, it's a big improvement to the earlier fractional real estate, which was, private. It was all listed on a platform, a website, and if someone wanted to sell, then the platform had to find a buyer for that person. It was not exactly liquid. Many platforms didn't even have that facility for its users or investors. But once the SM REIT regulations came in, you are mandatorily required to list these units on the stock exchange. Our first SM REIT was listed on the Bombay Stock Exchange. And the reason I say that it's justified is because liquidity is not instant like the way it is for equity shares or, the top 50 companies or even the 4 or 5 REITs that are listed, because they are larger, they've been around for longer. The minimum ticket sizes have come down for REITs from what it was earlier, a few lakhs to, per share, which could be 200 rupees or 300 rupees. But for this new product, SEBI has still kept the minimum investment quite high at 10 lakhs. And therefore, the number of units traded are not as many. But if you look at what's been happening since we listed, I think on December 10th, there has been pretty good liquidity on a daily basis. And if you want to sell, there are enough number of buyers who want to buy your units on any given day.
Sure. Just a couple of more questions then. Viral, coming to you, which are the top hotspots, for fractional real estate investments in India, which are increased or which are witnessing increased demand for commercial real estate and, which can in fact ensure consistent returns and long-term growth?
Yeah, I think a very straightforward question. It's Bangalore, Bombay, Pune, Hyderabad, Gurgaon. I would also add in Chennai at this stage, in the order of the sequence that I mentioned. And, all these markets are doing, exceedingly well. And there's generally an undersupply of commercial real estate as we speak, because you had a cycle of residential real estate doing extremely well. And as I mentioned that, there is an undersupply because more and more developers are unable to make commercial real estate because of the long, it's a capital intensive business. So you really have to have the wherewithal. So you are in a market, it's a very classic situation, great value and not too much available from a asset class in terms of volume. Of course, there are some markets where there's oversupply, but generally all of these markets are great markets to buy commercial real estate through these platforms.
Sure. Then to sum it up, Kunal, any advice for potential investors who want to, take this route of investment when it comes to real estate? Anything you would like to share?
Yes, look, I mean, if we look at the product itself, it sits very nicely between an equity product and a fixed income product, which usually gives you, 7-8% returns like a fixed deposit, government security, corporate bonds with very little risk. And then there's the equity product, which sits at between 15 and 20%, but you could also lose your capital there given how, markets move. But this product sits very beautifully right in the middle where you get the 8-9% per year, paid quarterly, plus capital appreciation, which is sort of has the equity components of it. So it's a hybrid security, which I think should be in every investor's portfolio. Now, you could argue that, I could invest in REITs, which has been around longer, which is true, you can. The good thing about SM REITs is that you can invest directly into one property, which you might be familiar with more than a basket of properties which a REIT has to offer. So if you like BKC, for example, you could invest in a BKC asset and not anywhere else, or you could invest in Bangalore. So that way, I think it's a very good opportunity for investors to have in their portfolio. And now that it's fully regulated, I think it's a great product for anyone to invest in with liquidity as well as returns. One just needs to be a little careful, like Viral said, on who the investment manager is, because there's also skin in the game. Every investment manager needs to put in 5% of its own capital into every asset, which is great. But what is their track record? How much capital have they raised? How many deals have they done? How much do they manage? And all of these things. So if all of these things are ticked, then this is definitely a good asset class for every investor to invest in.
All right, Viral, lastly, your thoughts, vis-a-vis residential real estate and, other forms. Do you think this is the most, attractive opportunity that one should look at? Any advice?
So I would say on a wholesome basis, commercial real estate, and I mean, of course have a bias, I deal in commercial real estate. But I would say that, from a value standpoint, I made a mention, that commercial real estate comes at a great value. It offers you better return, and it is, to Kunal's point earlier, the return is sustained because the investor, when they buy such an asset, or when Kunal's firm buys this asset, there's a tenant already in place and they're bound by contracts, usually, right? And so these contracts are going to be period for 5 years, 7 years, 9 years. So you know that you are going to make that quarterly return that has been promised. And residential real estate, I think if you are making an investment, purely from a rental yield standpoint, it's 2% versus 8%, number one. Number two, also, again, the exit is a challenge here. Once the platform it is listed, it's far more liquid. It's evolving. The volumes are not very high, but you will be able to get an exit, in a let's say in a week or 10 days. If you bought, units worth 40, 50 lakh rupees, you should be able to make an exit. Residential real estate will be slightly long term, plus the taxation around it for the exit, etc., is far more complicated. So I would certainly go for commercial real estate.
All right, that's the word then. Attractive investment opportunity here, and the return potential is also far greater compared to the traditional real estate route. With that, gentlemen, thanks a lot for taking out time this afternoon and joining in. It was really a pleasure chatting with you guys.
Thank you very much.
That was a deep dive into the world of fractional real estate investing. If you are considering this route, remember to do your due diligence and choose platforms wisely. We'd love to hear your thoughts, so do share your feedback in the comment section below. Well, that's it on Realty Returns. So see you next week, same time, same place.